Hello ladies and gentlemen, hope you are fine. My name is Bookkeeper Fazan, and in this short video lesson I'm going to teach you that how you can do accounting cycle in Excel in real life practically. So as you know, since our BCom days or since our MCom or MBA days, we have been studying that accounting cycle. These are the steps are the accounting cycle, right? First record the transaction, journal entry, ledgers, unadjusted, adjusted trial balance, then financial, then closing. So we are going to apply this practically, right? So this is the first step is recording. So for example, record the transaction that invest 5,000 in the business, take a loan of 10,000, purchase supplies on credit, purchase equipment on cash, paid to vendor, cash sales, sold goods on account, received cash, paid the loan, paid the salaries, dividend paid. These throughout the year, these transactions happened, right? Now let's go to the second step in the accounting cycle, which is journal entry. Journal entries, we have got all the journal entries like bank capital, bank loan, everything. We do it like we are taking bank instead of cash. That's it. Okay. So the next step is ledgers, T accounts. We have ledgers, right? These are the T accounts. We have bank T account, capital, loan payable, supplies, accounts payable. These are all the ledgers we have, right? All the accounts we have. So as you know, the total of debit side is just credit side is just so the balance is 8,500. Then the balance is zero because we already paid liabilities. Supplies is 1,000. Again, the liabilities are zero. Already paid. Again, the receivable is zero because we have already collected all the cash from the customer. Okay, this is the depreciation. This is the dividend. Okay, so now we are going to move into the next step, and this is unadjusted trial balance. So this is the unadjusted trial balance. As you know, this is the unadjusted trial balance we have, and then we have to go adjustments, right? Adjustment, we have only one adjusting entry. For example, for the year, depreciation expense and allowance for depreciation, we have 400. We use a straight line method. The cost is, as you know, the cost of the equipment, and the life we take is 5 years, for example, right? We assume that the life is going to be 5 years of that equipment. So we didn't take any salvage value. We just divided the cost with this life, by the life, right? Cost divided by life, that's it. So we have got 400 for the year. It's not for the month, it's for the year. 400, right? So adjustment we have got. Then now we have got adjusted trial balance. The only two things are added: depreciation and allowance for depreciation, right? Ladies and gentlemen, as you know, loan is zero, accounts payable balance is zero. So depreciation, allowance for depreciation, we have it. So we have got 13,400 adjusted trial balance. After adjustment, we have got adjusted trial balance. Now we have got financial statements. This is the balance sheet, ladies and gentlemen. As you know, the bank, all the balances: receivable zero, supplies 1,000, total current assets this, then liabilities we have got loan zero, accounts payable zero, total liabilities zero, capital 5,000, then retained earning 6,100 we have got. Okay, ladies and gentlemen, we are going to do its sales. This is an income statement, right? Income statement is 8,000. Salaries, revenue, sales is 8,000. Salaries expense is depreciation expense is, as you know, there is no cost in this example. So our revenue, sales is our gross profit, right? So 8,000 gross profit minus salaries expense and depreciation expense. So we have got 6,600 net profit. Right, now we are going to calculate the retained earning. Assume that retained earning beginning balance is zero. We don't have any retained earning before that, so the balance is zero. Beginning balance is zero. Then the profit we add is 6,600. Then the dividends we paid is 500. So 6,600 minus 500 is 6,100 retained earning closing balance. Right, ladies and gentlemen. So we put the retained earning closing balance over here. Retained earning closing balance. Now we are going to move into closing entries. Closing entries we make is profit and loss, which is I said a temporary account, right? Temporary profit and loss. Now we are going to close the expenses and revenues, as you know, and dividend as well. So all the income statement accounts and dividend is going to close. Profit and loss debit. All the expenses going to credit because we are closing them. All the sales we are going to debit. We are going to debit because we are closing them. Profit and loss credit. Then we are going to transfer your profit into retained earnings. So profit debit, retained earning credit. Now retained earning debit, dividend is going to retained earning is going to decrease. That's why it's debited. That's it. Hope you understood.